So that's one way how people get started. If they don't have a lot of money, the other thing is you can raise money too. You can raise money, obviously friends, family, borrow money, all of that type of stuff that you can do. I would say that would probably be the first step that you want to do is maybe the first, either buying a multifamily or the primary residence that you live in at some point in the future turn it into a rental property. Okay, so that would be my first thought after, just so you can learn to get your feet wet.
This is JP from Blueprint for Prosperity Network, founder and architect of the channel, 10 plus years in retail banking and 13 plus years in financial services. And in this video, I'm going to be bringing you a unique collaboration. One of the nation's top premier mortgage lenders. That's right, a direct lender nationwide, Angelo Christian. He's going to be bringing in a ton of valuable information in an organic, unscripted conversation. We're going to be covering everything to go from a tenant, literally a renter, all the way up to first-time home buyers programs, house hacking, and turning that house hacking into multiple rentals and scaling that rental portfolio all the way out into small multifamilies and apartments. We're going to be covering all types of different loan products, DSCR, investor cash flow, investor lines of credit. We're going to be talking FHA requirements and criteria needed to scale from a tenant all the way up to multi-million-dollar success in real estate. This video is going to be jam-packed with information, so I recommend that you either take notes or find a way to bookmark the key points that you take from this video. Drop questions down in the comment section down below. Of course, you'll have links to Angelo Christian and all of his content as well. But I had to bring this one to the channel. I was excited. You guys know that I am diehard about helping you to master your relationship banking and maximize your borrowing capacity, because at the end of the day, that's going to be the core foundation to your blueprint for prosperity, especially through real estate. So this video is going to be an absolute gem. I appreciate every single one of you for taking the time out and value in yourself to tune in. Let's stay focused and get in motion.
Much for reaching out. I really appreciate that. And I know you wanted to do a show, so I'm curious to see what you want to talk about or what's on your mind, and see if we can figure something out to add value out there to all of our followers.
Absolutely. Yes. I appreciate you taking out the time, being so prompt and responding. This is awesome. So for me, I've been in banking and financial services for over 10 years. So, you and I are in a very similar line of business. We're in the same space. I've been watching your content for a while.
Oh, nice.
You do great work. And I've been looking forward to the opportunity to have somebody at your level reach my audience and new prospective viewers with how they can go from, let's just call it a tenant, all the way up to, a multi-million-dollar real estate investor or a portfolio of multi-million dollars, and just kind of walk through using the products and services and the programs you have to kind of walk from here to here is the base.
That's a very good question. And we cater to a lot of investors, a lot of these self-employed entrepreneurs. And we've helped a lot of people scale up their business from the funding standpoint, give them consulting advice. And a lot of times they come to us as first-time investors, and they don't know as far as the legal side, the entity side, as far as protection from lawsuits instead of the proper LLCs, and then the tax side. I mean, there's huge tax incentives, tax benefits to invest in real estate, and then the right loan products, working with the right lender. So I think that we can add a lot of value to your followers, and I mean that's what I preach and what I talk about all the time is getting the information, getting the content out there, because a lot of people, they go in, and you see this all the time, where they'll get into fix and flip deals and they really don't know what they're doing, and then they get in trouble, and then they end up losing a lot of money instead of maybe partnering up with somebody that's an expert or joining somebody that really knows, or watching your show and my show, that's something that's a show that's adding value to give people the knowledge, the information, to guide them along the right way. And that's really how our channel got started. Was we've been in lending for over 20 years, and so many people would ask us thousands of questions and say, hey, you know what, I'm going to make a channel and just talk about loan programs and finance and credit. So many people don't know about credit, how to get their credit score up. Yeah, so I mean, I think that's a great thing to discuss. So I don't, as far as, are you wanting to talk about specific loan programs or like the A to Z, or what are you thinking?
Yeah, so the goal, I wanted to kind of paint a picture. If I'm, starting out as a tenant, maybe I have a stable job, no experience, in real estate, let's get into my first property, maybe make that property potentially some type of investment property. So with an ADU or 2 to 4 programs that might be available to help me get into that property. Maybe I don't have a lot of cash. We'll talk about down payment assistance, what I can use for reserves like 401ks, IRAs, and graduate out from that property to, my first rental, and then scaling out to multiple rentals and maybe small apartments. You know what I mean? Just kind of walking through the products and taking somebody on that journey.
Yeah. So I would say that what a lot of people do to get started is they normally end up buying their primary residence and getting down payment assistance. Like we have FHA 0 down, and you can use that. You can do that with multifamily, or you can do that with single family. The benefit of that is you can get 100% financing, no money down. And then the main requirement is that you have to live in the house for at least a year. But let's say you bought a 4-unit, for example, right? So you live in one of the units and then you lease out the other 3. So you don't need a lot of money to put down in the beginning. Okay. You can get 100% financing. We have the down payment assistance up to $50,000 to be able to help people to be able to buy the home. But it is a requirement that FHA, you have to live in one of the units or live in the property. Now the requirement is you have to live in there for a year. So that's one way how people get started. If they don't have a lot of money, the other thing is you can raise money too. You can raise money, obviously friends, family, borrow money, all of that type of stuff that you can do. But I would say that would probably be the first step that you want to do, is maybe the first, either buying a multifamily or the primary residence that you live in at some point in the future, turn it into a rental property. Okay. So that would be my first thought after, just so you can learn to get your feet wet. I don't think it's really a good idea to go from being a rookie to a 200-unit multifamily, because the banks aren't going to finance you, because those loans are very stringent. They have a lot of strict requirements. So I would say start with that. And then from there, once you get your understanding, you get the knowledge, then you can look at DSCR loans, NonQM loans, bridge loans, fix and flip. But I think that one of the most important things is align yourself with the right network. So that way you have the right legal, you have the right accounting, you have the right people around you. For example, one of the things you have to keep in mind that, everybody is searching for real estate opportunities. So how are you going to be any different? So there could be 100 people looking at the same property. So are you networking with wholesalers? Are you working with brokers that do off-market private listings? Because if you're just going on the MLS to look for properties, that's what everybody else is doing. So you got to do something different. A lot of people have gone to ground up construction, a lot of investors, because they can't find properties. So they're developing communities. So I think that you got to, figure out what your plan is and then kind of work through there. But I think to reduce the errors and the time and the cost is put yourself in the right network, the right mastermind, so you can be successful. Okay. Because if you're with the right group, for example, like we're the lender for them, and you have people that are there to help you with the brokerage side, to find those special listings that have a lot of equity. Like we partner up with banks that have a whole foreclosure list, and we see what their tape is before it actually goes onto the street for sale. So there's banks that have, like they have loan tape of, a lot of loans that are in default. And if you can get access to those before they go to the market, you can usually get better deals. So you need to figure out, I think, first networking. I would start with your first deal, either buying a multifamily or even the house that you lived in. And then at some point in the future, turn into a rental. And then after that, I would set up your series LLC. I think is a great thing. It's your corporate entity, and move all the properties into the LLC, because you shouldn't have anything in your name personally. Everything should be in your company name to shield you and protect you from liability. If there's a lawsuit, let's say that your tenant falls down the stairs and they break their neck, they can't come after you personally. They're going to sue the LLC. And most likely this is a special designated LLC just for that property, so they can't touch your other assets, right? So this is a very important thing that I think that you want to set up the right LLC, and you can use, accounting firm, law firm, whoever. But that's another big thing too. Like if you're going to like these real estate meetups, like they're going to guide you and tell you who's the right people to use, because the other side of it, if you use the wrong people, they can screw you. There's a lot of lawyers out there that are sharks and they screw people, and there's a lot of good lawyers too. And they could charge you 10 grand to do something that costs $200. So you got to be really careful to make sure that you're working with the right people. And that's just, I think that will help you along the way. So my thing is team up with a mentor or a guide to kind of help you, that's someone that's honest, that's sincere and real. Even if you have to pay them, but I think that's the important thing, is it could save you a year or two and tens of thousands of dollars. And then from there, you can scale it up, get into, larger deals. You can do syndications. I mean, when you get into these large projects, several hundred units. But I think in the beginning is getting your foundation down, making sure that's solid, and then you can use maximum leverage. As far as, buying other properties in the future with maximum leverage, a lot of people use gap funding or down payment assistance. So let's say that you're 2-3 years into the business, and what lenders want to see is that you have a few deals under your belt to give you 100% financing. Okay, so you have to do at least 3 deals in the last 2 years, and you have to have preferably a 700 or higher credit score. And if you meet those requirements, then you can get 100% of the cost for the property as long as the ARV doesn't exceed 70%. Okay, so but that's not for rookie people. So you have to show that you've done at least 3 deals, and if you've done that, then and you have a good credit, and if you have bad credit, they're not going to do it. So you got to get your credit score up. That's another thing too, that if you don't know how to get your credit score up, we do help our clients with credit repair. There's also a lot of great credit repair companies out there. We work with Rondy Lambeth out of Las Vegas, and with Fortress Credit. We work with him for the last 7 years. So a lot of my clients go to him, and he does an amazing job. But you gotta get your credit up. You can't get into this game, if you got a 500 credit score. So you gotta focus on that too. And you gotta pay. I mean, this is part of how it works.
Yeah. So I'm a big advocate on the channel of teaching the wholehearted approach to your finances, even though people are very, very attracted to the creative ways to get into financing with real estate. Ultimately, you want to get to a place where you have good cash flow, good reserves, and great credit. If you really want to play this game at scale, I agree. I want to back up for a second. You dropped a lot of valuable information in that stint. So on the onset, the ability to potentially put no money down on, a given property, including multifamily, 2 to 4 units. What does that look like? I know you mentioned, I believe that's a program, and you have up to $50,000 in grant funding in that arena. So what does that look like a little bit? And then let's kind of scale out from there and talk about, you mentioned about buying the right property, having equity, and that maybe being able to snowball you into your next real estate ventures because you have equity to tap. And, maybe we can talk about some of the first lien products that you have in that process. So if you don't mind breaking it down.
So in regards to if you're wanting to buy a primary residence and get into the rental game at the same time, FHA is a very good conduit to allow that to happen. Because let's say again that all over the country, there's different type of real estate development. Like a lot of people right now are building 2 families, 3 families, 4 families because we're running out of land. And let's just say that you buy a 4 family. Well, you can lease out the other 3 and collect that rental income. So let's say each unit is $1,500. Well, now you're collecting $4,500 a month rental income. You have to live in one of the units. So now that income goes towards your income calculation to qualify for the loan. You can use up to 75% of it to qualify for the loan. Now you do have to have a 620 or higher credit score. And for this FHA loan, you do have to verify your income for the last 2 years. So it's a full documentation loan. And I'm not saying that you have to start that way. But if you haven't done any transactions, nobody's going to give you 100% financing. If you're a first-time investor, you have to put 20% down. Okay. Now, if you don't have the 20% down, that's fine. You can raise the money. You can put it on a credit card. You can get a loan. It doesn't matter where the money comes from. But the first lien lender is not going to give you 100% fine. I don't know any first lien lender that will give you 100% financing and you're brand new into the business. Now, if you do a JV with somebody, but that person has experience and you guys form an LLC together and that guy has 3 deals, then you could get 100% financing. And then you partner up with him, right? Maybe you do the work and he just, goes on the paperwork, so that's another way that you can do it. Yeah. I mean, if you're a first time investor, you have to put 20% down unless you do some type of joint JV thing. But the idea behind starting with the FHA, because you can at least get one started. And then if you have the one done in one deal, then you can get away with 10% down. You don't have to put 20% down. So, and again, it doesn't matter where the money comes from, because it's private lending. with hard money, they don't source where the money comes from for the down payment. They don't care as long as the LTV is right. So then from there, once you're experienced at doing it, again, if you've done 3 deals in the last 2 years, you can get 100% of the cost. So let's give you an example. Let's say you find a property in New Orleans that's $500,000 purchase price, and it needs $200,000 of rehab. So that's $700,000, right? So let's say the value is 1.2 after it's completed. So they're going to appraise the property, assuming that the property is completed, the after repair value. So they're going to take the 1.2 and multiply that by 70%. So that comes out to like 860. So the lender will lend up to 860,000 on this property that you're purchasing to buy the property, closing costs, and sometimes even no payments for 6 months or 12 months while you're doing the rehab. And so you're getting 100% financing because there's so much equity in the property. But that's the key, is finding the property that has that much equity in it, right? So that's going to be the hardest part. So, and if, like I said, if you do, we have the products for you. But again, remember, you have to have a 700 or higher credit score.
700 or higher, and then at least 3 deals.
Right.
Okay.
That you can prove that you've been involved with. Like, they want to see the settlement statements.
Okay. That makes sense.
Yeah, it's not like, I helped the guy, 10 years ago. It's not like that. They want to see that you were involved. Show me the settlement statement. Show me proof. That's why, like the FHA, you have your settlement statement right there to get started. So it's a good way to get started. I mean, it's not the only way. I mean, some people, like, they have a successful family member, and that family member is in the real estate business, and they add them to the LLC. That would jumpstart you dramatically. So, but I'm saying for some people that don't have that, they're starting from scratch.
Yeah. So let's stick with that narrative. We're kind of focused on, we know if you have, a strong network of people around, then that can give you a huge boost, a leg up. If we stick with, the individual that's kind of doing it on their own, you've already walked us through the process of getting into that first multifamily property, house hacking, leveraging that, building cash flow, building equity. We've reached our year, and we've got some decent equity we can tap. Now we want to roll into those next couple of deals. What process are we taking from that point of coming out of that 2 to 4 unit property, getting into our next couple of deals? Maybe we've got a little equity out now. We have $30,000 or $40,000 or $50,000. We've gotten our credit score to that 700 mark. Let's talk a little bit about maybe the DSCR or cash flow lender loans that might be available to get into the next couple of rental properties from there.
Yeah. So, I mean, everything that we've been talking about so far is like the exits to sell. So I know you mentioned first lien HELOC and DSCR. So those 2 products are assuming that you're going to hold the property. So bridge loans are assuming you're going to sell. Now, let's just say that you're assuming that you're going to keep the property. So DSCR, that stands for debt service coverage ratio. So basically, it's long-term finance. Let's say that you've completed the rehab, you bought this property in New Orleans, and you don't want to sell it. You may say, hey, you know what? I want to keep this property. It's worth 1.2. So now you can refinance it either to a DSCR loan, and you can cash out up to 75% loan to value, and you'll get a 30-year fixed mortgage, at a low interest rate. You don't have to have employment. You don't have to have a job. You don't have to have income. They're just underwriting the cash flow. Now, what matters is that the rents coming in have to be able to make the payment on the loan. So if the payment's $2,000 a month, you have to collect at least $2,000 a month. The lender is not going to make the loan to you with 0 down, even if you're refinancing, if the rents don't cover the loan payment. Okay. So that's the DSCR. It's a great product. You can close your LLC. It doesn't report to your personal credit. So some people don't want that stuff on their credit. So that's good. So now the first lien HELOC is a completely different loan product. That's a line of credit that would pay off the bridge loan. And basically it works like kind of like a credit card, where you have a bank account attached with an ACH, and you can pull from it whenever you want. You can pay it off whenever you want. And then what happens on a daily basis is whatever the money you have in the account is swept against the loan every night, and it pays down the interest. So your interest is constantly recasting every day. So your effective rate will go down dramatically. Let's say that, for example, this property in New Orleans, if you had $700,000 in the account, the loan was for $700,000, and the payment was $2,000, and you had a line of credit, you had available credit of $300,000, but you had $50,000 in your account that day. That money that night will go to pay against the loan. Now, you may say, well, I don't want that money to come out of my account. Then you can take it back out and you can move it to a different account. You decide how much money you want to put into that account, but it's trying to reduce your interest expense, right? So your interest rate will be end up like 2 or 3% instead of 8%. And then whenever you need to pull from it, you go online, you request funds, and that money is deposited in your account same day, direct deposit. So if you have a $300,000 credit line, you can pull funds out whenever you want. So it's good because it's very dynamic, because you can get money whenever you need it, and you're reducing your interest cost.
Makes sense.
Yeah, it just takes the thing on that loan. We have a lot of calculators, a lot of videos. It's definitely for somebody that you need to make sure. Like, people that usually they need to make sure that they understand the loan and that they're researching it, because if you're brand new, it may be overwhelming, and a lot of people, they don't do it because they're scared. But the thing is that knowledge is, like I say, knowledge is power. If you take action, and this is one of those products that that's why it was created. It was created by engineers. It's used all over the world, actually, Australia, Europe. It's just now coming to America like 20 years ago, but it's been like in Australia for the last 50 years, in Europe. So it's a great program. You just got to take some time to research it.
Makes sense. That makes sense. So you essentially, one of the things you're highlighting is that you are able to transition from loans being dependent on your ability to repay to transferring over in a private lending space to where the property or the deal itself is covering a lot of the heavy lifting to get qualified. So you're kind of walked us through getting through that first multifamily property, and then that is going to start opening the door, especially if it's a multifamily 2 to 4 unit with rents that you hold on to. That starts to open the door to burgess off into DSCRs and other different loan products that can help us take the pressure off our personal finances and get into the property and the deal qualifying for that. It makes a lot of sense.
Yeah, and the thing is that I think at the beginning is probably the hardest part, but once you kind of get going and get momentum, it kind of has a catalyst to be like a snowball, I think a lot of people, they don't. And the thing is, I think why it's so confusing is there's a lot of different information online. That's all over the place. Do this, do that. There's TV shows, do this, do that. And I think people don't really know, if you're brand new, what to do. So I think I'm glad that you're talking about this, because it'll help to educate people, because I think there's a lot of ambiguity out there, and I think this will certainly help.
Yes, a lot of white noise for sure. So with DSCR loans, are there reserve requirements? Can you talk about that a little bit? And what can you use, if you don't just have the cash, or there are other instruments you can use, financial instruments? If I have a 401k, IRA, is that an option with those reserves? Can you get into that?
Yeah, so when you're doing long-term financing, they definitely want to see that you have reserves in the account, because they don't want to, the lender's goal is not to take the property back. They don't want to do that. So, their whole thing is, okay, if something bad happens, can you make the payment for 6 months? So usually most loan programs want to see 6 months reserves. What's reserves? That's the monthly payment. You have to have 3 to 6 months of monthly payments in your account. Now that can be many different things, like you mentioned, 401k, stocks, bonds, mutual funds, checking, savings. Even the cash that you're taking out can be the reserves. If you're cashing out, that can be the reserves. So keep that in mind. So if you're pulling out on this New Orleans property, 300 grand or whatever, that can be your reserve requirement.
Okay. Interesting.
Even the first lien HELOC, all these long-term loans, they want to see that you have, the magic number is usually 6 months.
Okay. But it's pretty flexible. We're not just relying on just cash in my checking account. If I have other financial instruments, then I have options there.
100%.
That makes sense. Okay.
Yeah, the one thing though, that for reserves, you can't take a loan out for reserves.
Fair enough. So not a person, just don't take a random personal loan out.
No, they won't allow that.
Okay. Has to be some actual financial instrument that you have that has equity or some value, essentially.
Right.
Okay. So we've gotten, maybe we branched ourselves over to maybe like our original multifamily. We have a couple rentals we've gotten through DSCR. Are we at a point now where we can start discussing portfolio type of loans? We got a little bit of a portfolio building up, and we want to get into small, 5 to 10 unit apartments or something like that. we got decent equity and decent cash flow on the existing properties. How many properties do I need when I start to, get to that next level? I got maybe 3 properties, 5, that may allow me to do some kind of portfolio loan or acquiring somebody else's portfolio rather, you know what I mean? And maybe they
Yeah.
have small apartment unit. What does that
Yeah.
process look like?
So to get into multifamily, which is 5 plus, you can do obviously commercial loans, Fannie, Freddie, FHA, multifamily. You can do private lending portfolio, but really to do that properly, you have to have comparable type experience. So like if you want to buy a 10 unit, they want to see that most investors that are funding the transaction want to see that you've done something similar. It doesn't have to be exactly 10, but it definitely has to be at least 5 plus. Like if you're starting and you did a single family and now you want to buy, let's say you find a property in Orlando, a 10 unit for 2 million and your resume just shows you have one single family rental, you're probably going to have to put 40% down or a massive down payment. Because they're going to be like, well, who's your property manager? Do you know what you're doing? Especially if you don't live in that state. If you're out of state on top of that, it's going to cause more layers of risk. So to cover that risk, you got to put more money down to make the lender feel comfortable. But if you have on your resume a 5 unit, a 7 unit, and you've had them for a few years, you got a property manager under your belt, or a team or whatever you got, then you can get, Fannie Mae, Freddie Mac. Fannie Mae and Freddie Mac, those are long-term loans. Those are the best type of loans that you can get. But the requirements are pretty stringent, but the terms are amazing and they're non-recourse loans. FHA is a very good loan too, but you have access to commercial loans. And to make the NOI work, you're going to need, a loan product like that, like a bridge loan. I mean, some people do this. Some people will buy that property. Let's just say it's in Orlando, 2 million, and they use a bridge loan. The bridge loans usually have, 10% or higher rates. So it's like, well, how am I going to pay the rent or pay the mortgage if, the rate's so high? So it's not designed for you to stay on it. It's just designed for you to buy the property. And then you can refinance to a long-term loan once you take title for the property. And that's okay, that works, but then you're just going through 2 sets of closings. And my thought is not to do that. My suggestion is if you can get long-term financing, that's better, because then that way you don't have to pay 2 sets of closing costs and just go through that process and run the risk. Because let's just say the rent's 10% and your payment to the lender is 15 grand a month and you're only collecting 12,000 a month. Well, now you're negative 3,000, so you're having to cover that. And that's going to, and some people can do that. Some people they don't care. Some people have a lot of money and they don't, but that's their model. But if you're not used to that, I would definitely say not to do that. You want to try to get long-term financing up front if you can.
Okay, that makes sense. So I want to make sure that I'm focused. If I'm looking at maybe a 10 unit or whatever the case may be, and I'm transitioning from maybe 5 or 6 single family units or multifamily units, I want to bridge off into apartments. The goal is to make sure that I'm within maybe 50% or higher of the doors I'm looking to get into with apartments. Is that fair? Maybe if I'm looking at a 10 unit, you mentioned I want to have 5 or more units under my belt for a couple of years.
Yeah.
And then I also want to make sure that I am structuring myself for the kind of financing that'll have borrowing costs that are working to my net operating income going into my apartments. That's fair?
Right. I mean, yeah. I mean, the other thing is that if you don't have that, what some people do, they bring in a credit partner and then they'll do some type of JV thing. I mean, there's people that do that too. And there's actually companies out there that do that for a fee. And so, I don't really get involved in that side of the stuff, but I mean, there are some people that let's just say that you didn't have a 5 unit, or experience or higher, and you got a partner that has all this, huge resume. He may be willing to partner up with you, so, but of course, I mean, you guys got to work that out. So I'm just saying, if you haven't done a 10 unit, I don't see a lender just making a loan to someone that's never done that before. Unless you got a rich daddy, or something like that that's going to do it. I mean, it's, lenders because the thing is that lenders don't want to go out of business, and they, it's hard to repossess properties and foreclose on them. It's a process, and it's very expensive, and most lenders don't want to mess with that.
So the lender's essentially looking at you. Their product is money. They're looking at you to basically be the management that helps them get a return on their money. So that's why they want to make sure you have all of the components in place to stabilize whatever asset you're going to plunge their money into, so they can make sure they're getting their money back with the return they agreed upon. Is that a fair way to look at that?
Yeah. And if you do good, I mean, the sky's the limit. Like we have, many customers that start off doing one deal, and then later on we give them a line of credit. Like I got a client just last Friday. She did her third deal with us, and we gave her a $2 million credit line. And she does fixed to rent Airbnb, like in Galveston, beachfront stuff, and she loves it. And she's a broker, awesome. So she finds these deals that I guess they're cash offers because they're in really bad shape, and have a lot of equity. And she's done a very good job. So she's paid us on time. She's never late. She's got good credit, so we gave her a line of credit.
That's incredible. So if I am a good steward and a manager of the money that's been given to me, then over time it gets to the point where you guys will just, hey, here's a line of credit, write a blank check, in a sense of speaking. You know what I mean? Go out there and invest your heart out.
Right. Because we trust her, and so it's just like in any other industry. You got like these movie producers that they trust the director. That, hey, you go wild, man. Like James Cameron, the guy that made Avatar. Yeah. So they don't care what he does. He's making the company money. So that's as long as he keeps doing that. So it's kind of the same thing. So if we know they're doing a good job, we want to kind of lock them in and help them to scale their business. So that way, if they have a line of credit, they don't have to go through the whole loan process. They could just go to the auction or whatever they want to do, buy the property, and boom. Don't need an appraisal. So it's a better way, faster for these real estate investors to do business.
Yeah, it's like an almost infinite dry powder. You're just ready to go. That makes sense. Yeah. What are your current, as we kind of settle towards the end of the conversation, I want to be respectful of your time, of course. I do want to get your perspective. We've kind of talked a little bit about coming from starting from scratch as a tenant, working our way all the way up to multifamily units, the products, some of the requirements. What's a brief, viewpoint from your lens on where things are in the real estate market currently, and kind of what you think or foresee? Because this is an interesting time we're in 2025. What do you kind of foresee the next maybe couple years out from where we are now, and what do you think people should be doing right now?
Yeah, it's a good question. I'm a big advocate of Trump. And I know that that's a touchy subject, but I do think what he's doing makes a lot of sense to me. Yeah. I don't know how it's going to reciprocate though in the world and everything. So if his plan goes, well, then I think that real estate is going to be, rates will go down, and the real estate market will be thriving, and it'll create more, more opportunity, more people, because rate, in my opinion, right now rates are just too high. They got to come down at least a point or two. And the thing is that I don't know, because there's a lot of backlash, to the stuff that he's doing, and I don't know how that, if there's massive rebuttal and things don't actually happen, then I am concerned. I think that potentially if rates stay where they are, or they go back up higher, that we could have a housing crash, real estate prices will crash. People are not going to be motivated. You're not going to want to buy a house. Let's just say that, you look at, you want to go buy a house. Let's say you buy a $2 million home versus 7% versus 4%. Like if you ask me if I'm going to go buy that house, I wouldn't do it.
Yeah,
because the payment difference is like $6,000 a month. And that's a waste to me. Yeah. So I'll just, and that's kind of what a lot of first-time buyers that don't have a lot of money, that's how they feel, because they can't qualify for the loan because they're, they make whatever $70,000 a year, and they're trying to buy a $500,000 house, and the lenders tell them, look, you don't qualify, you don't make enough income. It's not because there's anything wrong with them, just the rates are too high. So so I think that it's kind of difficult, because I think what he wants to do, like, it makes sense in the long run for the United States, but it's so much happening so fast that people can't handle it. People can't handle a lot of change at one time. It's too much. They get overwhelmed. Hey, you're doing this, you're doing that, you're doing this, and it just, people's mind is going crazy. So and I understand what he's trying to do, but it's hard to say, man, because it's kind of still early for him on how it's going to shape out. I'm confident that it will, because he's a fighter, and that's my response, like it's just, I really don't know, like for sure, but I do think if he can, pretty much, everyone on board, or to the most part, make the changes that he wants to. And, for example, get rates to go down. I think that it's going to be a really, really good time for real estate, man.
Yeah, for sure. Yeah, he's having a rough time at the moment, for
Yeah.
sure. I do agree with a lot of his economic positions, especially like his domestic policy. I agree with the interest rate perspective as well. We know high interest rates are gonna stifle borrowing capacity. It's also gonna stifle your cash flow, like we talked about earlier, with your borrowing costs versus the income you're bringing in from your deals. So higher rates is not only stifling homeowners, but it's stifling investors as
For
well.
sure.
And we know
For
that if
sure.
you drop transactions long enough in real estate, that naturally leads to an imbalance of supply and demand. And then, as you mentioned, potential housing crisis scenario, right? So what do you think? Let's just assume that one way or another things shake out 6 to 12 months from now, we start to see rates come down, because there's a lot of pressure on the Fed, right? Like the higher rates is really hard. There's a lot of fragile parts of the economy with higher rates. And it's beyond just the politics of liking Trump or not. There's a lot riding on staying as high as they are right now. So let's just say that the pressure forces the Federal Reserve at some point in the next 6 to 12 months to lower rates down. Maybe we get to the fives, maybe even get lucky enough and get to the upper fours. Do you have a perspective on what class of real estate, maybe, or a couple of different classes of real estate that may be great to get into? I know commercial's taken a hard time since COVID. I know single family and residential properties has been kind of hot. We have large corporations getting into that, so do you have a perspective as a lender, a premier lender,
Yeah.
if you're, an everyday person or a small business, small investor, hey, this might be a really good couple classes of real estate to get into in the next 6 to 12 months if rates work out the way that they should?
Yeah. Yeah. I do think that commercial, I think so. If you're a large investor, because I deal with a lot of large investors, they're buying up commercial left and right, like office buildings. Office buildings have gotten killed, and you can get them 20, 30 cents on the dollar right now. Nobody wants them. And then what they're doing is they're converting them. You can convert them to condos. There's so much that you can do. You can, the thing that whole industry, like I got a customer that bought a $30 million building here in Houston for $7 million.
Wow.
And it's 12 stories, and he's converting them to office condos and then selling each story for $2 million,
Oh, that's smart.
and he's offering the financing to the customers to buy them. So
Wow.
he's going to make like $15-16 million, and we gave him the loan, and he didn't have to put any money down because the LTV was so low.
That's incredible.
So I think that's a good, because it's like the old saying, buy, when there's blood on the streets, buy real estate, but invest. And that area that has gotten hosed. So I think that's a really good area. I do think, I don't know, like I'm not actively, because I'm more on the lending side, and what I see is a lot of people do, because I'm making the loans to a lot of developers. A lot of people are not just purchasing multifamily or townhomes or condos anymore, they're developing them. So we see a lot more loan requests for that, because you can get in cheaper, and you're kind of, there's so many people there's not really a lot of good stuff on the market that makes sense. So, but if you can buy land and develop it, like 48 townhomes, and and then what they're doing is they're not selling them, they're renting them out. So that what's kind of shifted to the mindset, instead of fix and flip, it's build to rent. And so that way you can keep those and just collect, cash flow. So you see a lot of companies right now, like Blackstone, they're coming in and they're buying, like Chase and Wells Fargo, all their foreclosure portfolio, hundreds of billions of dollars, and just turn them into rental properties. So, so it makes a lot of sense. So I think that, and of course, I know we can't do that, but just, it gives you the idea that maybe, obviously the complication is, okay, you don't know how to build a house. I don't know how to build a house. So you can learn or partner up with somebody. I think that's a good, learning how to do development or partner up with somebody. Like one of my very good friends, he's a builder. I partnered up with him, and I did the financing. He did the construction, and we split the profit. So
makes sense.
Those are good JVs to do. And, he has a good eye for finding land. Usually, there's still good land available. That's obviously more work, but I think that, build to rent is good, or buy, instead of fix and flip, maybe buy and hold, So if you get rates down to 4 or 5, then the NOI makes a lot of sense.
Absolutely. That makes sense.
I think if you're going to be around destination areas, like around the coast, I mean, I know there's risk because of the hurricanes, but short-term rentals still seem to be like a good investment. I have a lot of clients that do Airbnb and VRBO, and they do very well. The biggest thing is whatever you're going to do, you just have to be an expert at it. I don't think it's a good idea to start dabbling in all this stuff, because you'll definitely, you'll probably get clobbered. You got to really make sure, and that's why I don't think doing it alone makes sense. You got to really team up with the right group.
That makes sense. So expertise is priceless right now, essentially. It's not a good time to go out there experimenting, essentially.
I don't think so. I don't think. I think there's ways you can learn and get the right mentorship. Yeah.
So closing out, I know that I paid attention to your content, something that I don't think a lot of people maybe have caught, or just may be valuable for people to know, the everyday person to know, or maybe people who may be kind of around real estate. You also offer essentially a referral or affiliate style program available. So if you want to kind of explain that, because I think that's a phenomenal opportunity for people to kind of get closer to real estate, get closer to deals, and also obviously make some extra money. So, what does it look like to qualify to be able to participate in that, and elaborate on that on the way out?
Yeah. No, I'm glad you brought that up. So we have something called a loan partner program. So basically, let's just say somebody like you, for example, you run into people every day in your world, in real estate that need loans. Well, you're not a lender, but you can make extra income by just referring the deal over to us, and then we'll pay you up to 1% for that transaction. So if somebody wants to buy a $400,000 house, we'll pay you up to $4,000. It depends on the loan, depends on many different things, but it's up to 1%. And you don't have to do any work. You don't have to be licensed. You have to get signed up with us. We have a loan partner agreement. And then you just send us over their contact information. Say, hey, John's looking to buy a property in Baton Rouge, $300,000, first time buyer. Can you give him a call? Or I got, my friend, Eddie, he's trying to buy a rental property, Lafayette, or Houston or Dallas or whatever, or Miami. We lend nationwide, so it doesn't matter where it's at. So, and then you just say, hey, here's his number, give him a call. And then whenever that loan closes, you just get a direct deposit into your account for that referral. And you're not doing any loan processing. You're not collecting documents, any of that stuff. You're just referring the client over to us.
That's pretty exciting stuff. We're talking about.
It doesn't cost you anything to do it. It's just if you know somebody, your brother wants to buy a rental property in Orlando, and we offer we're nationwide commercial, residential, and private. We have low rates. We're a direct lender, so our rates are competitive. So it's not like we're raising our rates or anything like that. It's just we try. That's how we get referrals, is through our loan partners.
Yeah, increasing value makes a ton of sense. Right. Makes a ton of sense. That's excellent. That's awesome. I'll definitely make sure that we link that in the description of the video.
Yeah, I'll send that to you. I can send you the loan partner agreement.
Yeah, that'd be great. I would love that for sure. I'm a banker at a financial institution.
Oh, for sure. Yeah. I'll get out to you today.
That's awesome. That would be terrific. Did you have any closing thoughts about anything, anything you would like to say or kind of put out for the audience? We've had a great conversation.
Thank you, James, for doing this. It means a lot to me. And I want to let everyone know that, make every second count. Make the most of yourself, be the best that you can be. Always strive to go to the highest level. Don't ever give up. Don't back down. Sometimes life goes up and down, but you just got to keep going. I know it's easy to get frustrated or upset. The main thing is you just got to get up every day and keep fighting.
I agree. I second that 100%. Angelo, it's been a real pleasure. This has been phenomenal. Great information. Really hoping we get an opportunity to do this again in the near future. This is great. You're putting out great information. I'm going to make sure all of Angelo's information is linked down below in the description section. We're going to also kind of put it in the footer of the video. Yeah, man, I appreciate this. I'm looking forward to collaborating soon, and I wish you great success along the way.
Yeah, you too, man. You too. Thank you. Nice to meet you. I'll have that information out to you today.
Perfect, man. That sounds good.
Take care. Stay strong, man.
Hey, so in conclusion, I don't know about y'all, but I could have had that video run for hours. That conversation was jam-packed with a ton of information. Hopefully this laid out a little bit of an imagery based on where you might be in your journey with real estate and overall financial freedom that you're striving for, and how to do it through real estate. We covered a lot. We're talking about going literally from a rental to a tenant, all the way up to a multi-million-dollar apartment complexes, etc. real estate investor. So hopefully you got a lot of value out of this video. Comment down below and let me know some of your final thoughts. questions, the value you got out of the conversation, and what you'd like me to cover more in future conversations with intent to obviously bring this guest back on. Other than that, I want you guys to like, comment, share, subscribe, support the channel so the channel can continue to support you. If you're looking for links and information to Angelo Christian and his entire platform and network and his company, that'll be in the description below. I'll also make sure I put some handles on the screen for him so you can follow him on social media as well. Literally, a gem, a phenomenal contact in the space of mortgage lending, a great resource, as well as your opportunity to connect with me on Instagram. That'll be down below. The handle will be on the screen somewhere for that as well. If you want to work with me one-on-one, there'll be links in the description down below. Hopefully at this point, if you've been following the channel for a while, you can see that I am extremely decorated in the space and I enjoy helping people in the space as well. So if you're looking for opportunity to collaborate and get curated guidance around your situation, help you master your banking relationships, help you maximize your borrowing capacity, help you get into real estate and scale in real estate, and work with me in the links down in the description below. Other than that, to all my pioneers, welcome back. To my new viewers, welcome in. I want each and every one of you to stay focused, stay in motion. I'll see y'all soon. This is my blueprint for financial empowerment and self-sufficiency. This is my blueprint for optimal health and body mastery. This is my blueprint for mental, physical, and spiritual momentum. This is my blueprint for prosperity.